Right, let's wait for that to load. Come on. Right, cool. Right, we're live there. Let's close that, and let's start the webinar.
Feel like a right doing this, but here we go.
Well, good morning, everybody. That was a lovely, warm welcome, as the video always is. Welcome to another marketing meetup. This time we are coming live from Birmingham. I'm James Sambrook. I'm Joe's co-founder. If you've not met me before, I don't run many of these events, but super happy to be here. So good morning. Oh, look straight away already with people from Hamburg, Norwich, Devon. That's awesome. So make sure you put in the chat where you're sort of calling from, and importantly, that little drop down changed from panelists and attendees to everybody, so everybody can get involved in the chat. The same goes for the Q&A as well as we get into today's session. So Joe usually gives you the challenge of keeping that chat feature buzzing, and don't forget that our vibe that we always try and bring is good vibes only. So listen, say hello, and be positively lovely. That's where we're at, and most of you will know that already. I'd also love to see afterwards. Joe always gets loads of engagement on social media afterwards. So if there's something that we've brought to you today that has been kind of an epiphany or a really cool moment, then please do make sure you share it wherever you like to share on social. So LinkedIn, Twitter, Instagram, we're on all those things, and tag us in so we can see what you've learned. That would be amazing. Sounds good? Okay, so let me introduce our guest today. Our guest today, Sally, is otherwise known as the Pricing Queen, and she is the founder of Business Growth by Numbers. And today she's going to be talking about budgeting. We were kind of joking before that, you know, budgeting isn't the sort of sexy social media type topic that everybody like jumps on normally, but it's such a necessary part of what we do day to day. And if you're anything like me, I'm sure there's a bunch of creative people in the session today who pay less attention to budgets and profit and loss and all that sort of stuff, and focus on the creative. You know, that's what you're there for. Put in the comments if that's you, because it certainly is me. You know, I get really excited about creating stuff, and then I'm like, oh, have I made any money this month? So yeah, that's going to be a really common trait, I'm pretty sure. So everything Sally does is designed to make finance and budgeting side of life a lot easier and clearer and more effective. So that might be budgets within a business. That might be a budget. So you might be working within a brand. It might be that you're a freelancer or you're running an agency and you've got to control budgets that way as well. So today there's going to be a presentation by Sally. And then afterwards, there'll be a Q&A. So if you look for the Q&A feature, drop your questions in there, and then there's a voting system. So if you see a question that you're like, yeah, I really want to know the answer to that, make sure you hit that thumbs up, and that question will rise to the top, because usually we don't have time to answer all the questions. But if you want one of those answering and you see a good question, get them in early, and those will rise to the top, and we'll answer those at the end. So before we get started, as you know, all these sessions are free, and they come to you, and we can make these happen because of our sponsors. Today, we each time we try and sort of feature a sponsor and give them a little bit more of a shout out. And today it's Gravity Global, who are an amazing agency, and they're recruiting. They're recruiting heavily as well. They're going great guns at the moment. We were chatting to them yesterday. Lovely folk who very early on sort of supported us in Norwich and in Cambridge to sort of get the physical marketing meetups going. So wonderful business. Please do go and check them out. But also a big thank you to Attest, Content Square, Hrefs, or as Joe and I were joking yesterday, refs, depending on how you say it, Impression, Content Cal, Fiverr, Redgate, Cambridge Marketing College, Brand, and Third Light. So one thing that would just make us so happy is if in those follow-up emails that you get, there's a link to all the people that are sponsoring and are making this happen. So just drop her a little note and be like, do you know what? I watched Sally today and she just blew my mind, and now I'm making millions of pounds because she gave me this one tip. So yeah, I think that's probably enough from me, enough waffling. And so I'll hand over to Sally. And as I say, make sure, get your questions in nice and early, and yeah, enjoy. Sally, over to you.
Thanks very much. I think, can you see me all right? Let me just share my screen and make sure we can do all of that. Right, is that all right? Can you just see the slides? Brilliant, and me, obviously. Hi there. So yes, so that's a welcome and a half. That is. So yes, I'm Sally. I am an accountant, and this is a bit about me. So I live just outside Cambridge. It's not a sunny day today. In fact, it's looking very grey. And I have a husband and 2 small children. They're not that small anymore, actually. And these are pictures from last summer. And I've obviously had my hair cut since then because I had breast cancer last year. So that's part of my kind of story. And actually, it's taught me a lot about what I do and don't want in my business, which has been quite a helpful thing about kind of what I want to do with my time. But I've basically spent 25 years as an accountant in business. So I have never worked for any of the big accounting firms or anything like that. I don't do tax returns. I don't do year-end accounts. What I do is get inside your business. So I have worked for people like Channel 4. I have worked for Guinness World Records. I've worked for Philips Electronics. And I've been always inside, working quite a lot with marketing departments, but all sorts of non-financial people. So I don't spend much of my day talking to accountants. So I had to learn quite early on not to talk in jargon and all of that sort of thing. And now I spend my time, so 4 years ago, I set up on my own. And now I spend my time doing small business accounting and talking to businesses about pricing a lot. So about how to improve your pricing, how to have conversations about pricing, but also that how important it is to know your numbers. It doesn't matter if you never want to do them. You need to know what's going on inside your business. So today we're going to talk a bit about how to create a budget, how to manage one, and making sure it doesn't take over your life. And we're also going to talk about some key pricing tips. Now, I know there's kind of a mix of people here where some people are running their own business and some people are running departments within businesses. So do ask questions about both. That's absolutely fine. But I kind of focus it a little bit around kind of being a department because that kind of is relevant to everyone. So why a budget's important? So one of the things that I just said just now is you need to know your numbers. You've got to know where things are and how you're doing against it, some sort of marker. So it puts a marker down of what you expect to spend in the next 12 months. And some of that's going, actually, this is my cost for the next 12 months. And then you're going, right, okay, well, if I want to spend 10 grand, I've got to get 10 grand's worth of revenue at least, or whatever it is you need to make enough to pay yourself. So it puts down a marker of what you expect to spend. It can give you sign off for spend as well. So it might be that your chief executive or you say, right, okay, well, that's the budget I've got. And up to that point, I can then spend that money. And then after that, I'm going to need to either get more approval or make another decision. So if it's just you might say, right, okay, actually, I'm going to put aside £5,000 for marketing in the next 3 months. And once I've got to the limit of that, then I will rethink it. And in bigger organizations, you might go to a CEO and say, right, okay, I'd like some more budget, please. And here are the results. It gives you something to aim at. And it says, right, okay, this is where I'm going. And if you're doing profit and loss, definitely, this gives you something to aim at. But also, it shows you where things haven't gone to plan. Because I think it's really, it's all very well going, oh, yeah, well, I've spent all the money. It's like, but did you get the results that you wanted from spending that money? I think particularly marketing is a particularly easy one. I mean, it's not quite easy, but you often expect a return on the money that you spend. So if you spend money on an office, you don't expect a return on that. That is just a cost, and you just decide that you'll spend X amount on office or you won't, kind of thing, or you'll work at home. Whereas actually in marketing, you might say, well, I'm going to do this campaign or that campaign, or spend on, so Facebook ads is often an easy one. Did I get a return? If I spent this much on Facebook ads plus the ads manager, did I get more than that back in revenue? And and you need to know whether that worked or not. But it's important to know where things have not gone to plan or where you've overspent. And you need to have confidence. Oh, and that says in what you are doing. So not just what you are, but what you're doing. So you need to have confidence in your numbers and being able to explain to other people how it's going. And even if that's just explaining to yourself, like how your business is doing, and from a numbers point of view, whether that's just in terms of budget or whether that's in terms of profit, and how much you've paid yourself. If you're doing this yourself, you need to be paying yourself. Otherwise, it's a expensive hobby, I'm afraid. So things to remember. Budgets are out of date almost immediately. They truly are. Oh, you can't know everything at the time. So they are a point of time. They are a point in time. And you do say, right, I'm doing this now for the next 12 months. And you can pretty much guarantee that it'll be out of date. So they're set usually just before the year end. And you say, right, okay, for the next 12 months, this is what I'm going to do. That's quite a long time. Lots of things change. And in very small businesses, it really changes a lot. So really think about what might change over time, and also what your business might look like if certain things happen. So kind of looking at risks and opportunities when you're looking at the numbers. But generally you do a 12-month kind of forecast, and you might update that quarterly. So you might say, well, actually for the next 3 months, this is my focus. And then at the end of that 3 months, well, what did I do? And here's the rolling out for the next 12 months. Okay. Oh, my slides have gone all a bit weird, sorry. So creating a budget, do you have all the information that you need? Is there a target in mind? You need to understand all your costs. So make sure you've thought about everything that you spend in your business. So if this is you need to make sure you include the Zoom costs, the membership costs, your professional fees, your virtual assistant, all of those things. And if you're in a business, have you included all the salaries and all of the, there's an increase in national insurance for next year. Have you included all of those things? And do you have all that information to be able to get that budget together? Do you have a target in mind? So do you know what profit you want it to be? Do you have a target? So if it's your business, do you have a target about how much you want to pay yourself? Very important. How much do you want to pay yourself, and therefore how much do you need it to earn you? Do you know all your costs? Do you know what costs are fixed? So again, if you've got an office, that's a fixed cost. You can't change that. Your salaries are pretty much fixed. I mean, yes, you can change it, but it's tricky. Freelancers you can turn on and off much more easily. And if you outsource work to other people, you can turn that on and off much more easily. So the fixed element versus the variable element. So think about fixed as being things you cannot turn the tap off quickly. So think about those sorts of things versus variable things that actually, if you stopped having client work, you could turn off tomorrow. Okay. Is your spend linked to revenue? So often marketing budgets are a percentage of revenue. So they're often targeted as a percentage of revenue. And I think it's really good to look at kind of, is that percentage sensible? What if you make less revenue? Does that mean you then get a smaller budget? And if you have a bad month, does that mean your budget goes down and things like that? And is the work seasonal? So is your business seasonal? Are there months where, if you're a business that markets a lot around Christmas, do you need to have a massive marketing budget in like October, November, and not much the rest of the year? But actually your sales are not going to come in until December. So you might need to have some money in the bank to be able to do the marketing before you get the sales. Okay, so that's thinking about your cash flow, which I'm not going to talk about too much today because I don't want to go mad, because otherwise everybody will go home and cry. So creating a budget, and I've got a spreadsheet that I can share with you that you can download, if depending on whether you're a department budget or a company budget, but have a spreadsheet. Start with your salaries and your kind of fixed costs. So sit there and go, right, okay, what are all my costs, and put them all in for the next 12 months. And then your other kind of fixed costs and your variable costs and your nice to have. So if you want to spend more, where would you like to be able to spend more? If you made more money, would you want to invest that in marketing, or would you want to pay yourself more? So I think it's thinking really strategically about your numbers, about what that means to you. If you spend more on marketing, you're likely going to pay yourself less. Is that part of a growth strategy for you? Or is that something that you just go, actually, at the moment, I just want to pay myself more? Do you want to test some things? Again, if you want to test Facebook ads, you need to, and if you want to test any marketing strategy, as you well know, you've got to put a reasonable amount of money behind it in order to make sure that it actually works. So it's kind of being very deliberate. I think a lot of this stuff is kind of making you think a lot about, actually, what am I going to spend money on, and not just going, well, I'll do that today and I'll do that tomorrow and I'll do that next week, and kind of going, actually, in the next 3 months, 6 months, 12 months, whatever it is, I am going to invest in this type of marketing, and I'm going to push because I want it to generate me this much more sales or this much more business. So I think it's really thinking about actually consciously investing in spending on things that are important to you, and that will help your business grow if that's what you want to do. And okay, so managing a budget. So key performance indicators. Okay, so these are the kind of main things that you need to know in your business. So they are different for every business, but it's kind of going, right, what are the key metrics I need to know in my business? So in your owner business, it would be things like how much profit I'm making, how much revenue I'm making, how much cash there is in the bank, how much I'm paying myself. But in a marketing sense, it would be, how much is it a percentage of revenue? Am I making my budget? Am I overspending? Am I underspending? And actually, underspending is not always a good thing. You're people are like, oh, I've underspent, but actually part of, particularly again, I think in marketing, it's a revenue generating thing. You are expecting to make money out of your marketing spend. It's not a sunk cost all the time. So actually being under budget is not necessarily a good thing. And you want to look at the return on investment in campaigns, and can you measure that? I think it's all very well going, oh, well, we're going to invest this money in this campaign. It's like, well, the number of people I talk to about like Facebook ads who say, well, I spent all this money on Facebook ads, I don't really know whether people are actually buying off the Facebook ads. It's like, well, you need to have a separate landing page that you can measure conversions off that page. You need to make sure that you've got set up in the background ways of tracking those important metrics in your business. And things like conversions on your email list, conversions on things like Facebook ads, if you run I don't know, magazines, any sort of campaign that you run, how can you measure how successful it is? Now, some stuff is just general PR and brand awareness. Stuff like today, I come and I talk. There's not any guaranteed return. I don't expect to be able to measure that return. But if I did a Facebook ad, I would expect to be able to do that. And I think it's looking at, if I'm going to do this thing, what return would I need to be able to measure to know whether it's been a success? So the question to always ask is, how will I know if this has been a success and whether to keep going with it? Because I think, and Facebook ads is a classic example at the moment, where loads of people are spending a fortune. They're like, well, I'm spending like £2 on a lead. It's like, well, how much are you getting? How many sales have you got off the back of those? I don't know. And you need to know those kind of things, because if you're spending £2 and you're only getting £1 back, it's probably not worth it. Okay, so tracking a budget. So record the information monthly. So as much as possible, put the information into the spreadsheet, get your accounting system. If you've got one, I highly recommend you have an accounting system. If you're a limited company, you definitely need to have an accounting system, and I always recommend Xero. But if you've got an accounts department, brilliant, go and ask them for the numbers, but make sure you get them in a timely fashion at the end of the month, so you can kind of go, I know what I'm looking at, and that sort of thing. And so get the information that you need. And if that's just getting it out of your bank account, if it's just you can just do it out of your bank account. Do something that means that you will do it, rather than going, I need this massively complicated spreadsheet and all of that sort of thing. So that's what I would really like. So if you don't take away anything else, it doesn't need to be complicated. You just need a few key numbers to know how much you've spent, and if you're a business, how much has come in, how much has gone out, and how much you're paying yourself. And they are the kind of really big things that you want to know, is how much profit you're making, and therefore how much tax you'll be paying. Know what you've committed to. So if you're in a business where you raise purchase orders, that's quite a good system to use, where you say, I've committed £5,000 to this thing, and you can spend up to 5,000, but know what you have said you'll do. If you've committed to something, you can't suddenly go, oh, I can't pull out of that so easily. So make sure you're clear what you've committed to and how long you've committed with people. If you said you'll give it 3 months, 6 months, however long it's been to work on campaigns. And record in a spreadsheet so you know where you are. Like I say, don't make it complicated. Just have a list of ins and a list of outs if that's what you need to do. And review closely, particularly overspends, and making sure you understand where you have or haven't made the right decisions, if you see what I mean. And then quarterly, I always say, look at what's happened and then roll the rest of the year forwards. And you might do that either for the rest of your financial year, or you might do it on a rolling 12-month basis, depending on the way your business works or how you want to do it. And you kind of adjust for anything that needs changing. And then the new forecast kind of takes over from the budget. So you have a budget kind of at the beginning of the year, and often budgets are certainly in larger organizations, budgets are often set for bonuses purposes and for that sort of thing, and dividends and stuff like that for the owners. So and again, in more public organizations, they definitely are. So that there might be particular reasons to fix at to kind of keep the budget. But for most of us, actually, it's kind of like, well, that's the budget, but every quarter I might do a new forecast, and it takes over from the budget then, because things change all the time. I have looked at what I'm launching this year, and I'm actually not going to launch quite what I thought I was going to. So my revenue looks completely different to what it did 3 months ago. So I need to look at that again. And you may have to follow an organization's process. If they've got a process of doing that, lots of organizations I've worked in have a quarterly rolling forecast process where you have to roll that up and it has to be presented to the board. Other things to think about: if you need to set something up, make it easy for you to use, and make it easy for you to update. I was talking to James before, and he's got a lovely whiteboard on the wall in his office, okay, with all the numbers that he needs to know on it, right? He probably doesn't need anything else other than that. Obviously, he needs his accounts doing at the year end, but that's the sort of stuff that kind of not bogging yourself down with 50 million numbers, but make it easy for you to know what you are doing. And if that means designing something from scratch on a bit of paper, then that's fine, but have something that you can easily update, so when the actual information comes in, you can look at it easily. If you've got an accounts department or an accountant, ask them for help. They can help. They know what they're doing with the numbers. They can help you present the information and help you understand what's going on. And you can use this if you can do this if you're running a business as well. So that's kind of the main things on budgeting. And like I said, there's a spreadsheet to have, and you can ask me any questions about it and that sort of thing. If you want to use mine, do not feel you have to, but really kind of go for it. And then I'm just going to talk a little bit about pricing tips. So for those of you where you're doing your pricing, stop pricing by the hour now. Okay, so if you don't take anything, this is really my only tip for today, which is stop pricing by the hour. So pricing by the hour punishes efficiency. So you get better at stuff. Every time you do something, you get better at it, right? Every time you run a presentation, every time you do a bit of client work, every time you even onboard a client, it takes less time. So I do pricing power hours. The first time I did one, it took me 3 hours. Now it's less than 2. But I still charge the same, regardless of how long it takes. If you're charging by the hour, in theory, actually your time deteriorates. So you have to be really careful of that. So what you need to know is how much you need to charge by the hour, but not so that you get a minimum cost. So I have a pricing calculator which tells you by the time you've paid yourself and sorted out your business costs and work out how much time you want to work, you can see how much you need to charge. So what you do is you get the number of hours you want to work a week or a month, and it's surprising in front of the client, which is surprisingly little, actually, because we don't all work 9 to 5, Monday to Friday in front of the client. We can't. We've got to do social media. We've got to do some marketing. We've got to do all of the things that keep our, all the business development that keeps our business going. We can't just turn up Monday to Friday, 9 to 5. And if we do that, when a client leaves, we then don't have another client to line up after them. So it's very sensitive to how much time you want to work. So I want to work less in the holidays. I set up my own business because I want to work less in the holidays. I want to work and spend time with my children. So working out all of that sort of stuff and what your ideal is, and then what you want to pay yourself. Most of us don't pay ourselves enough. We really don't. I mean, I'd always like to be paid more. Because actually businesses cost money, and it's like, and being conscious about then, what you've got space to invest your money in and all of that sort of thing. But knowing how much that number is means that you can then package up your services. So what I suggest you do is you go through that calculator and you go, right, okay, well, I know it's going to be £100 an hour. I need to charge £100 an hour for every time I'm sat in front of a client. Right, okay, now I'm going to package up my services. So I always recommend you have like a minimum, kind of three packages of kind of a basic, a standard, and a VIP, which is kind of more of your time. So then you can kind of go, well, actually, I know that service will take me 10 hours. So that service now costs £1,000 plus or minus. You might put like a buffer of 20% on. So you might say, well, because things always go wrong and that sort of thing. So you might say, right, 1,200 quid. That's what I'm going to do. And that is a really good starting point to make sure that you get enough to cover your time and cost. Now, if you don't know how many hours it's going to be, you just have to make some sort of educated guess, and you will get it wrong. I mean, one of the things that you will do is get it wrong. But what packaging does is several things, which is it stops you having icky conversations about pricing. You don't have to talk to people about pricing too much. You just go, these are my packages. It saves masses of time sending proposals, because you just go, well, these are my 3 packages, and you can just have a PDF document of packages. You can also put price on your website, which can then put people off in a good way if they can't afford you. So you stop having conversations about price. If you're talking to clients, the conversation is about the work that you can do and the value that you can deliver. And what I want you to talk about with clients is to not talk about the features and benefits, which is, I'm going to do this many things for you, and I'm going to do this and that and the other. What I want you to talk about is the value. So the time you save somebody, the money you save somebody, or that kind of the hassle. You know, I have somebody do some of my social media graphics. Oh my God, it takes me hours. And I pay her to do them for me. And that's just something I don't have to think about. And I love that. So she saves me lots of hassle. So what is it that you do? What is the transformation that you offer to your clients? And often that is taking stuff off people so that they don't have to do it themselves. But you might also be able to say, well, actually, if I do your social media, I'll be able to generate you more engagement, more sales, whatever it is, even though you can't guarantee some of that stuff. That's kind of that's what you want to be kind of saying. So packaging up, really important. And then you can move to something called value-based pricing. Guy called Jonathan Stark talks a lot about this, and he explains it really well. But basically you kind of work out with the client what the value of what you're offering is, and then you offer something that it costs them slightly less, but delivers everything that they kind of wanted. So some of it's having conversations about, you know, how much do you want to spend on this? And then going, well, actually, if you've got 10 grand to spend, what can I do that gives them a result that's worth 10 grand? But if you want, I've got more stuff on value-based pricing, but it's moving. It's a more sort of advanced thing. So if you're not earning enough, this is the stuff you need to do first, which is, you know your hourly rate, don't charge by the day or the hour, and package it up. And if you do monthly retainers, make sure they are just a fixed monthly retainer. They are paying you to be their marketing person on call. They are not paying you to turn up for 5 hours of meetings and 3 hours of this and 4 hours of that. They're paying you to be able to, so you don't roll over hours and you don't talk about it as a number of hours. And you just have to make sure that you build it enough that if you have a busy month, you can cope with that. But try to move as much possible to fixed pricing. And like I say, you will get it wrong, and some projects will overrun, but hopefully some projects will also underrun, and you'll actually make money by saying, well, actually, this is now, it used to take me 10 hours, so I charge it at 10 hours, but actually it only takes me about 7.5 now. So you get 2.5 hours back that you could be doing something else. Okay. I recommend you put your prices up annually, and I do definitely recommend that you do it at the moment. I know it's a really tricky market at the moment because budgets are squeezed and everything else, but you also have to remember that you are a business and that you can't just, I know lots of businesses where their costs are just going up ridiculously, particularly product businesses, and they're not passing it on to the customer. And I'm like, you can't not pass them on to the customer, I'm afraid. And you make your own decisions about what that's worth, but make sure that you kind of are keeping up a bit with and I think at the moment people do expect it, everything's going up. So if yours go up, and have something to offer people. So if you're going to put your prices up 10% and somebody goes, well, I just can't afford that, then have something else, a smaller offer that they could take from you. So let's say they're on your standard package. Maybe you go, well, actually, look, I could do a bit less for you for the same price that you're on now. So try and have something else you could offer, so you don't lose them altogether as a client, but also that you're not discounting. To be really careful of discounting, because people say they can't afford it, because can't afford it means different things to different people. Actually, it often means it is true, but it often means it's not a priority. So actually, like, I have a virtual assistant and I choose to have that rather than a social media manager, for example, because I think that's more valuable to me. So it's kind of going, or I invest in such and such a program, and I'm not doing something else. So you've just got to really think about, so be careful of kind of putting your own money mindset stuff onto your pricing. It's really easy to do, and you kind of go, well, I wouldn't pay for that. And it's like, well, That's not, and it's not your decision whether they can afford you or not, because often it is about priorities. We all know somebody who says that they go and have a £200 haircut, they spend a fortune on their hair, but they won't spend more than £5 on a bottle of wine, because it's like, it's not, it's too expensive. They just don't see the value. There's not, they drink so much wine they don't care. But it's about what people care about and about what people value. So it's about you communicating that value. So I hope that's helpful. So ways to connect with me, there's a free budget template, and that's true if there's two different ones, one if you're a company and one if you are a business. So you can get that at businessgrowthbynumbers.com/budget. And then I've also got some other freebies, including a pricing calculator. If you go to the freebies on my page, I'm on Instagram at The Pricing Queen, and I'm Sally Farrant on LinkedIn. And my podcast is back next week, which is exciting. I'm very excited about my podcast being back, because it's been off because I've been ill for a year. So yes, and questions. And I hope I haven't totally overwhelmed everybody.
Oh, it's brilliant. Thank you, Sally. I think there's a ton of stuff that I've been scribbling away, because it's I was saying to Sally before, I came from a sales background, and so it was all numbers. And actually, as I went into the agency world, I started to see kind of the same mistakes. And you covered off some really, really good ones. One of the things that I made a note of, because I got caught out myself yesterday, despite being the person that is always going, oh yeah, I'm really good at pricing because I've got a good background in blah, blah, blah. Being tight on amends, or being really clear on how many amends is included in the projects that you've got. And that works both ways. I think if you're a brand and you're employing an agency, if you're an in-house marketer and they haven't specified how many amends that project includes, I think it works you need to make sure those lines of communication are really sort of clear. But also you mentioned about something that I really liked, where you were talking about the value that people see in your work and them not being able to quote unquote afford it. There's been a couple of cases recently where, and it's really hard for somebody that's coming from sales as well, is that I've turned work away because I know that I'm not going to make any money out of it. I'd really kind of like to do that work, but I know that they're going to be a really difficult client to work with. I'm not going to make much money out of it. And actually I could be doing things that are equally as fun, but actually make a profit. And then finally, the board that Sally was talking about, I bought the world's biggest whiteboard for my office. And just at the top, as somebody that doesn't focus enough on numbers, just having what sales you've got lined up, and then I've got all my freelancers underneath, and then I just total up each month, profit, loss, what's my net at the end. And that's a bit of a game changer, because as you're typing away or working away, you're always glancing up, and it means that you're always kind of like looking at your numbers, as opposed to it being on a spreadsheet somewhere that you fill out with bags of enthusiasm and then forget about it. Yeah, I'm terrible for that. I'll do a spreadsheet and I'm like, where is that spreadsheet that I made? I did a budgeting thing once, but if it's in front of you, then that's that's really useful. So that's enough for me.
But I think the thing about amendments are a really important thing, actually, which is that kind of you set boundaries by having packages and stuff. You start to set boundaries around client work. So you start to say, well, look, this package includes this many amendments. If you want more, it's going to cost you more. And you might even have a little package, which is, if you want extra amendments, it's an extra this. So I think it's really starting to try to feel that you can be clearer with clients, I think. And it's kind of going, well, this is what's included, but also implied and sometimes explicit, this is what's not included.
Yeah, and I think people really respect that as well. I know that if that conversation is had, then it's dead clear. Louise has put amends are a profit vortex. I love that. It's a great.
But
it's true, because you want to please. Okay, well, just do just one more. I'll open up the file once more and make the amend once more. Whether that's design or video or whatever it may be. And then there you are, just doing that quick amend again and again, and that's half a day gone. So
yeah, and it's also going, well, how long is the tail? Often the tail of projects is a problem. So how long is that tail? And if you get caught by those sorts of things, what what can you do to stop that happening next time? Because you will get caught. It will happen. A project will overrun. It'll be much more than you expected. Something will happen. But also, if people don't come back to you in certain lengths of time, and all of that sort of thing. Or the other thing I did not mention anywhere is get paid up front as much as possible. And if you don't feel you can get paid all of it, get paid at least half up front and half at the end. And if you're doing projects over several months, then arrange to bill monthly. Particularly at the beginning, you want to get billing, because then you can find out how quickly you're going to get paid, how much of a problem it is to get paid. You can understand the payment process, and suddenly you'll find that actually you don't get paid for 30 days. So, right, okay, well, now I need to kind of think about my cash flow and that sort of thing.
Yeah, something that I found from pitching for projects, but again, it could work internally, is businesses tend to look month on month at their costs. And if you've got, say, a website, like a big expensive project, and it's a 30 grand website, well, having 30 grand's worth of cash coming out of your business in one go is a real problem for a lot of brands. Whereas if you can afford it to spread that single project cost over a quarter, or even longer, they're then looking at a monthly figure. 30 grand becomes 10 grand over 3 months, and 10 grand isn't so much of a problem on cash flow.
But I think it's also making sure that you are getting money before or as you do the work. So you're not billing too much in arrears, because it only takes a company to be in financial difficulty and you don't get paid and you've done all the work. And also, I always feel like if you get something up front, they've put their money where their mouth is. So they've said, right, I've committed to you and we are expecting you to do some work. Whereas I think you can sometimes get to the end of the first month and start billing them, and they're like, oh, well, I wasn't expecting. Well, that's not. And also you can get in a debate about whether you've delivered what they wanted. And actually the fact that the result isn't what they expected isn't necessarily your fault.
Yeah. So Angie's just put, get billing.
Yeah, get
billing. Agree more, Angie. Okay, should we go over to some of the questions? So have a look through the Q&A, and if there's any that you really want upvoting, hit that little thumb button and they'll go up. But we'll start with Louise, who says, is there a formula for working, and I'm probably going to point towards your spreadsheet, but is there a formula for working out a budget? I often get asked by clients what percentage of the revenue should be allocated to marketing.
So it totally depends on your industry. So there isn't really a formula for working out how much. I mean, because it really depends on the business owner and how much. I think marketing is one of those things where you kind of go, actually, what do you want to spend? I think if you're starting totally from scratch, it's like in a dream world, what do you want to be doing, and what sort of conversion rates do you get on average from those things? So if you've done them before or done them since, it's kind of like, well, you just have to try, I think, some of the things and work out a little bit how it's just kind of how to go forwards with it, and kind of say, well, actually we want to spend this much. So part of it is kind of going, well, actually, if we spend 10 grand, let's start with that. I think part of it is having the conversation, which is you need to have a marketing budget, and what is a realistic amount that we could afford to spend on that. And if you're not a marketing department, have that conversation, and you can go and say, well, actually, look, if we're going to increase, let's say you want to increase your revenue, you want to double your revenue. Well, what are you going to need to do from a marketing point of view to be able to get you in that direction? You might not be able to double the revenue, but what activities do you want to do as an expert in your field? You go and say to somebody, to the person who's making the budget decision, this is what I want to do, and this is what I think will make the most results. And we'll have to test some of it, because random things pay off.
Yeah, and I think that kind of feeds into Adam's question about what a good ROI on marketing is, and I think that's probably for your client to answer. What's the if they're putting 10 grand in, what is their expectation for? And can you measure that? So some stuff is brand awareness. If you sponsor something, it's awareness. It's difficult to know whether one of your sponsors today is getting anything directly for sponsoring.
but some sponsorships, it is much more direct than that. You sponsor a podcast episode, you get more people come and they use a code and all of that sort of thing. So some of it's going, well, actually, which ones is kind of brand awareness, and we spend some of our money on that, and which ones can we measure and say, if we do this advert, we're going to make sure that we use this code or that, whatever it is, so that we can track how that did. And I think the return on investment is very dependent on industry. I think some stuff you're going to do doesn't have any return. Like I say, so Facebook ads is a relatively easy one because we kind of all know about them, which is kind of going, well, actually, you might start by saying, well, it needs to at least break even, which might mean covering your costs as well as a marketing person. So it might be like, well, actually, we need it to be £2 or £3, and we need to be making £2 or £3 back over a period. I mean, I think one of the things about marketing is it's not a quick win. A lot of the time, it's difficult to get very quick wins. I think it's a partly an awareness thing, and often campaigns and all of that stuff. So it can be quite difficult to get stuff like that. So I think that's also an education piece for you, which is kind of going, well, look, actually, if we start doing Facebook ads now or advertising now, it might take 3 or 4 months to pay off, and we will have to run this for X amount of time before we can know whether it's worked or not.
Something that I've explained over time to clients as well is that a percentage of your budget, as you said, don't expect any return on it, but that kind of brand awareness piece is feeding everything else. So you can't just do the bottom of the funnel stuff where you see the conversions. You have to spend money at the, if we're talking funnels, the top of the funnel stuff that isn't converting. Otherwise, you're not going to get anything further down. And sometimes I think just explaining that, people go, oh, okay, then, well, I'll, 20%.
And you want to have a mix of those. So for me, I do a podcast that costs me money because I have to get it edited and I have to get it promoted and all that sort of stuff. And it doesn't directly generate me any sales, but what it does do is promote me, hopefully, as an expert, and it kind of raises awareness of who I am and all of those kind of brand building things, but it doesn't generate sales directly, and it costs me money. So you're kind of going, well, it's almost a marketing spend. So it's kind of going, well, what am I focusing on that is kind of, and I think it's making sure that you're focusing, I mean, I'm teaching you all to suck eggs, but that you're focusing across the board, that it isn't all brand awareness, and it isn't all, it's where you're not going to get much return, or it's a very long-term return or less obvious return, versus things that you can find that, like maybe email marketing, where you can go, right, okay, well, I can definitely make a return on that next week. So kind of making sure you're kind of spreading carefully your marketing activities.
Whilst you were talking, Sally, I put into the chat, would anybody like a webinar on measurement? And the chat lit up. So I think we'll probably look to do something around there, because I think it would be really useful. It's something that we all need a good reminder of. I know I'd enjoy that one. So from an anonymous person, do you have any tips for raising your rates with existing long-term freelance clients?
So in some ways, I think now is a good time to do it. Everybody's got to put their rates up. So this is why I say do it annually, because you put them up 5% every year, and then 5% people kind of go, oh, that's fine, it's not very much. I think part of it is going, they like the relationship. If they are good clients, they like the relationship with you, they love it, they don't want to change. It's a right ball ache to change people, your freelance, if you work well with somebody, you don't want to change them. And in the end, you just have to go, I need to put my prices up. And what I said to you before about kind of having a slightly lower level thing, if you can, it is trickier. So the thing I would always say is start with new clients first, and just start advertising your new prices and use that as a way to generate more income. But in the end, you have to say to your clients, I am putting my prices up. And if you can give them like 3 months notice, but say on the 1st of June, I'm going to be putting my prices up, and I'm going to need to do that. And unless you let me know, that's what's going to happen. But I think it is trying to have something that is thinking about what you can offer people, those people that you're might lose, that you're worried you might lose, although remember, that's your money stuff. I've had loads of people say, oh, so-and-so didn't pay me, but then I saw that on Instagram they were on a luxury yacht. So be careful be careful, because it so often happens that the priority is just not you. So, and remember, you need to still make a business, you still need to make a profit. So have a minimum that you need to earn to be able to do that. But yeah, I think it's kind of, you just have to bite the bullet a bit and accept that, and particularly if you put your prices up a lot, accept that you might lose one or two, and try to have a funnel or get leads so that you might get some new clients. Remember, if you double your prices and lose half your clients, you've got half the clients with twice as much time. So yes, you lose clients, but actually you can get more clients, so you are earning more. So try not to be, and I think part of it is not being afraid to lose clients. It's hard. Nobody wants to lose clients, really, but start with the client that you care least about, either the cheapest one or the one that's the biggest pain in the neck, or something like that. Start with something that's easy for you, that you're kind of like, well, I kind of don't care about them that much. They're my least, they're obviously clients, so they're lovely, but you don't, they're the ones I'm going to start with, because actually they're the ones I would be least worried about. And then you'll know kind of from their reaction how somebody else might react.
Yeah.
So
I think it's funny when you look at when you up the prices for new clients, and you do what you said about upping the prices for clients you don't really care that much about, and then you look at all the sales that you've got, and the ones that aren't paying enough or on a really low rate all of a sudden stick out like a sore thumb, and you're like, well, hang on, everybody else is kind of paying those rates and are happy. Then that kind of psychologically sort of, I think,
part of it is remembering that you are an expert and the value that you give to clients. We all forget that actually we are all experts. We all do stuff almost with our eyes closed. You kind of go, oh, well, I just kind of do it. It's easy for me. But what's easy for you is not easy for someone else. And it's kind of trying not to undervalue yourself about it as well. And it is a business. We all need to make money. And remembering that if we make more money, so we generate more taxes, we can give back in other ways. There's all that stuff about, I want to be able to give to people that can't afford it. But there are other ways to do that. You can do that through charities, or you can give pro bono time and stuff like that. If you're earning more, there are actually more options to give away your time and money in ways that you choose, rather than giving away your time for free by accident kind of thing.
I think it's probably worth sort of touching on the same question, but for internal brands, because I know I was chatting with a client yesterday about things like Facebook ad spend over the last 2 years has gone up a ridiculous amount. But I know I've got clients that are still spending the same amount each month and expecting kind of the same results. Like, is there a way, I'll probably kind of answer my own question, but sort of demonstrating to internally why you need more budget? Is there a sort of any tips you'd have there?
Well, I think it is, if you've got clients, if you can show that from clients who are spending more, that they are getting better returns. And I would think that you would just be able to demonstrate to the client that you're still spending the same, but you're getting less good returns. But it's explained to them that that's not because of what you're doing. That's I've got this client X who is spending Y, and they're getting this return because they're spending more. And I think some of it is just saying to clients, actually, if you don't have, I think Facebook ads are a particularly thing, is kind of, but I think it's true of a lot of marketing. If you haven't got 10 grand a month to spend, 5 grand a month, whatever it is, it's actually not worth you doing Facebook ads at this point. We should wait until you can afford to do that. So I think that's part of it, is kind of going, actually, you might say, well, actually, there's a minimum threshold for me to do it for you. I can teach you how to do it, and that will be cheaper, but there's actually a minimum threshold, and you need to be, I have talked to Facebook ads people, and they're like, well, you need to be able to spend this much on me and this much on, because that's the other thing that makes it prohibitive, is you've got to spend the advertising and the person to run it most of the time.
Yeah. There's a good question here from Simon, which says, which system could you recommend to help sales forecasting? A lot of CRMs just forecast the revenue for when it's won, not on a cash flow basis, e.g. when the invoice is paid. Have you got any bits of software that you use?
I use Xero a bit, and that's quite good. Got some quite good short-term cash forecasting. And I use something called Futurely, which kind of bolts onto the front. which you can then use to do forecasting and stuff like that. So I have moved away in my more complicated businesses from spreadsheets, and it kind of does it all for me. It'll feed in from zero, but I don't think there's any great sales forecasting tools. Spreadsheets are kind of where it's at. I haven't found a good one anyway that I would recommend.
Okay, so we've got another anonymous person here says, what's a good starting budget for a solo marketer in a small B2B business? Should it be a percentage of revenue or turnover?
So revenue or turnover are the same thing.
Yeah.
Again, I think it depends on the industry you're in. So if you can do some research about your own industry, that's quite helpful. Or talk to other people who are in similar industries. I think a lot of it is about how much a business owner is prepared to spend, because I think it can be quite a sensitive subject, not a sensitive subject, but it's a tricky subject, because I think you do have to spend a decent amount of money on marketing to make it worth it. So it's kind of going, actually, where do they want to go with their marketing? And again, I think it depends on the plans of where they want to be, and what sort of, are they trying to raise awareness of the brand? Are they trying to get more sales? Where is the next, let's say, 6 months going to be? Because I think it then depends on what sort of activities you might do.
Yeah.
Which I know is sort of not quite an answer, but there isn't really a kind of, there isn't a specific percentage of revenue to pick. I think a lot of it in a small business is kind of going, actually, where do you want me to focus? Where do we want to focus our energies? You can't do everything. We're not going to do all the social media platforms. We're not going to go in every magazine and every TV advert. It's like, well, what are we going to focus on?
I think sometimes even if you pick a percentage, you've got those constraints to work within. And if the revenue goes up, then your budget's getting bigger. So it's kind of incentivized for, even if you said, right, it's going to be 5%, then at least you know where you stand, and it's down to you to get creative with that, I guess.
Yeah.
Okay. So somebody said, do you have a suggestion for project budgeting rather than department/agency? Do you prefer Excel or Google Sheets? Any formula hacks? I'm guessing that's covered off in the free resources you've got. Yeah,
it is. Yeah, some and some. But yes, I think you just treat it like another business. You just do the project rather than the whole business. So, but remember, when you're doing a project, if it's your business, you need to make sure that you add in a proportion of your overhead costs and your time as well. So just be careful that you don't do just a project, which is, oh, well, these are the freelancers, these are the people, if you're in a business, you'll need to make sure your costs are included, but if you're not, you need to make sure some of your overheads are included in those costs, so you don't undersell how much that project is going to cost. But again, it's a bit like packaging. I do the same. It's the same process. It's kind of going, actually, how much of this am I going to use, and also how much of that is going to be extra because I got a package, so what else do I need to include? Extra freelancers and all of that sort of thing. So you can use a package kind of thing as a bit of a similar thing. I prefer Excel, but I'm an MS Office through and through lady. I don't do Gmail and stuff like that. So I think Excel and Google Sheets are absolutely fine. Then there's no great difference between them.
Yeah. There's one, I think we've got time for just very quickly one last question, which I really like, actually, from Steve Curtis, who says, how do you encourage your team to care about measurement and budgets? Any tips there?
Incentivize them.
Okay.
Well, the main way is to offer money if they reach the targets.
Nice.
Bonus, that's why budgets are often set, is like senior management will get a bonus if they increase profit by more than a certain amount over the budget. If they meet budget, they get 5%. Go over it, and then it kind of goes up to a point. That's often, so you have some sort of reward system, whether that's money or whether that's just, we're going to go out for a night out. It doesn't have to be money, but just thinking about some sort of reward system. And also, if you're doing like we just said earlier, if you're doing a percentage of revenue setup, they care about it because they'll start to be able to have more money to spend. So if you can kind of talk about that as well, kind of going, actually, if we do a good job here, there will be a bigger budget because they'll have more revenue. That's quite powerful as well. So
yeah, that's amazing. Great stuff. Wow, thank you, Sally, and thanks to everybody that's come on the call today. It's been really good to actually think about finances, as silly as that sounds, but it's good to make sure you're sort of partitioning some time to do some planning, and as you say, I think now feels like a really good time to be doing that. So yeah, all I'd say is for everybody, please do go and thank our sponsors, share any kind of key learnings that you've got from today on social, and so that we can keep growing this brilliant community. And we really appreciate everybody that comes along. We really appreciate the speakers, and obviously really appreciate our sponsors as well. So thanks so much. We've got another webinar next week. Joe will be back in business next week, and yeah, we'll catch up with you all soon.
Thanks for having me. Take care.
All right, take care. Cheers, guys.